Continuation with national income accounts and related aggregates. In this, I want you to know what is the principle of national income accounts. That is very interesting. It's just like what we have with what we do with our business accounting. Just that. So, of course, we know that the various definitions as we've just discussed, just go through this. Like, for example, just to reiterate, let me tell you that it was Lord J.M. Keynes who came up with this. It is a recent origin. It has acquired new significance only after the publication of Lord J.M. Keynes' book, A General Theory of Employment, Interest and Money in 1936. And this brought about a revolution in economic analysis and policy. And national accounting is merely one of the various methods through which national income statistics are compiled and presented in a comprehensive form. And the important thing is, with the help of this, we can answer most of the questions which are faced by economists in their day-to-day work. So, talking about, like, again, there are so many definitions. So one again I can quote is in the words of Eddie Peacock and Copper, social accounting or national income accounting is concerned with a statistical classification of the activities of human beings and human institutions in ways which help us to understand the operation of the economy as a whole. So basically, when we see this, let me just again take up important points here. It is concerned with what? Statistical classification of what? Activities. Whose activities? Human beings and human institutions. In what way? In such a way which helps us to understand the operation, that we know how the economy operates. How is the economy operating? So again, continuing on with the fundamental principle. What is the principle behind national income accounting? It is that exactly like financial accounting or business accounting. So which is the principle of double entry or dual aspect. And this principle derived from the very nature of a transaction. And transaction takes place between how many people? Two people? Yes, so every transaction has two aspects. One is what? Debit and credit, what comes in and what goes out, money. And between, say, one who produces and one who consumes, or we can call it the firm and the households. So this is what we are basically going to do. So, talking about transactions now. Look at this. We are talking about transactions. So, the fundamental principle of financial accounting, again I'm repeating, is a principle of double entry. So, this principle derived from the very nature of a transaction. Now, a transaction can take place at least between two persons or parties. One of them receives the benefit and the other sacrifices the same. So that's how I said, no, we can take firms and households, transaction between firms and households. So okay, then let us take an example of a grocer selling a loaf of bread to a customer for rupees 40. For the grocer, it is a sale of one loaf of bread and receiving of cash, and the receive of cash of rupees 40. Now for the customer, what happens? On the other hand, it is a receipt of a loaf of bread and the payment of rupees 40 in cash. Right? It's as simple as that. Now, on the basis of the above example, it is clear that every transaction has two aspects. The two aspects of a transactions are called debit and credit. The rules are so formulated as to give one side of each dual aspect of a transaction, a debit and other a credit. So we can just, to cut it short, I can just say that an account, okay, the above principle gives rise to the concept of an account. An account is a statement showing both sides, that is, a debit and a credit, or a decrease and an increase through credit and debit. But let me just tell you that the decrease and increase through debit and credit are by no means a synonyms for decrease and increase. Important thing is which side stands for a decrease and which side stands for an increase depends on the nature of an account. However, the left side always stands for a debit and the right side stands for a credit, as you can see that. Okay, let's take the fact of the example and let us represent it in the form of an account as under, from the viewpoint of a grocer. That is a bread account. Let's write it as bread account. So we put it as debit and credit. By cash it will be rupees 40. That means one loaf has been sold for cash. And let's take the cash account. So we've taken the bread account first. Now the cash account, again, 2 bread, it is rupees 40. Cash received as sale price of the loaf of bread. Now if we take it from the customers, this is what we did. By cash we did it like that. 2 bread, cash received. It was like this. Now let's take the other one, which is from the customer's viewpoint. Now in this, the bread account will be to cash, bread purchased for cash, rupees 40, and in the cash account it is by bread, that is cash paid for the bread is rupees 40 on the credit side. So the fundamental purpose of commercial accounting, as we know, is twofold: to find out the income earned by the firm during the year and to show the final position of the business at the end of the year. This is more or less exactly what we are doing with national income accounting. So similar to various transactions, now let's take what kind of transactions are taking place in the business world. There are countless transactions. There are innumerable transactions that are taking place. So we just go through this. I'm going to hurriedly finish it. So similar to various transactions taking place in the business world, in every economy, countless transactions take place continuously. And these transactions are in the form of payment of wages and salaries by the firms, purchase of daily needs by the households, payments for old age pensions and subsidies, payments for specialized services, imports and exports. And just remember one thing: all transactions affect the working of the working of an economy. So what we do is we try to classify these countless transactions in some systematic manner. And for doing so, one thing is very important is, let's talk about productive activity and non-productive activities, which we'll do in the next class.